How long should you pay premiums into your policy? This is a question that comes up quite a bit, and there's a lot of opinions out there. And here's really the answer: as long as you would like to pay premiums. You know, we talk to people that are interested in funding a policy for their entire life. We hear them, hey, I want to pay premiums until I'm 100 years old, and I just want to keep on pumping money in to leave the biggest potential legacy via tax-free death benefit to my heirs. And then I talk to some people that say, hey, I want to move a lump sum of money. I've got $1 million here. I'm going to move it over to a cash value life insurance policy. The most efficient way to do that is 5 years. And Steve, after that, I'm done. I do not want to have to pay another penny into that product. So the thing is, we can design a policy however we want. You can design a policy where you have the option to stop funding after 5 years and then perhaps to continue on if it's 10, 20, 30 years, as long as you'd like. Meaning we do not have to decide that up front. A lot of flexibility can be built into the policy. And really, if we're in that situation where we're not 100% certain on what we want, maybe I say, hey, I'm going to pay in $100,000 per year. I've got money in savings. I know I can get it into the product for the next 5 years, but after that, I might want to stop. I don't know right now. All I can tell you, Steve, is I do want to do this, but I'm not sure how long I want to pay into the product. Well, we'll design the policy then with the ability to continue to pay, having the ability to continue to pay into it at $100,000 per year beyond year 5. Now, what I'll add here is the initial product design, but the company selection is important as well. We talk about different insurance companies quite a bit. You take the 4 major mutuals. I like them because the actual performance, the big 4, has been there. That's the main thing. We've seen them deliver to consumers. I don't have to worry as much about a policy underperforming and then the consumer comes back and says, like, what's up, Steve? Like, I thought I was going to have this much cash. It's not performing. And then they're upset with us. They're like, no, I didn't know. No. We want to always set it up for maximum cash value to avoid that objection and just do the right thing really for consumers. But aside from that, when it comes to going back to the question, how long do I want to make payments? Different companies have different advantages. I'll let you know this. If I want to have a minimal premium and just pump money into a policy for 5 or 10 years, and I take those 4 major mutual companies, I know I can do the most damage and really make that policy look great with some of Guardian's products. Very, very, very flexible, well equipped for a short payment scenario. Maybe I still continue to pay the premium or a reduced amount after my initial funding period, but if I max fund it for something like 5 to 10 years, it'll look good. And I can go longer than that. I can equip it to go longer than that, but just in looking at different companies, products, what they're ideal for or ideally suited for, you can do a ton of damage with Guardian in that particular situation. A short pay, call it 10 years or less. If I want to pump money into a product, say I want a minimum premium, I want to fund close to the MEC limit, but I want to pay into it for a long period of time, 30 or 40 years, one will overinflate the MEC limit a little bit so we don't have to worry about a MEC occurring long term. But the other thing is, Guardian, you can do it with them, but they're not going to be as well equipped. We will be forced to have a higher base premium. So we may pivot and then look at a mass mutual in that particular case. And then there's items to consider there. Their flexibility features are different when I look at those 2 companies. And those are just 2 companies with one example there. So if I'm in a situation where I love the idea of whole life insurance, the cash value benefits, the core benefits, safe, liquid, tax-free, but I have the question, how long can I or how long should I pay into it? And I'm uncertain at this point in time. Well, that's perfectly fine. If I have uncertainty, but I know I want it, it's just more so making sure that it's set up where I can pivot, make adjustments as time passes. This way, I'm not locked into a strategy, life changes, and I say, I wish I would have done things differently. So, hope this helps. As always, enjoy, and I'll talk to you soon. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.